All right, we got a big one here. We've got Kerrisdale Capital, Sam, David. We got the report here. Plug Power short. You guys did well today. The hammer, dropping the fucking hammer. So listen, guys, this is beautiful here. We got a ton of people in YouTube, a ton of people on Twitter. It's live. You got the authors of the short report. Guys, thank you. Yeah, great to have you guys on. So, guys, either Sam or David, do you guys want to just give us the high level of the report? There's obviously we're live. I can take questions here, but let us, give us the high level of what is Plug Power. I like the title. I like the title a lot. Pulling the plug on this fool cell maker. Like it. So, hit us with the thesis, and then we can drill down.
Sure. I mean, there's two elements to the thesis. I think the first element is that the hydrogen economy is something that we don't think is going to develop in the way the bulls imagine, and that's partly because lithium-ion battery technology and just battery technology in general will continue to be the superior way to deliver energy relative to hydrogen fuel cells for a very long time, or for forever, right? It's just the law of physics at the end of the day, and with each passing year, the technology behind batteries is going to advance further than the technology of hydrogen fuel cells. And so today, in terms of light vehicles, in terms of trucks, in terms of energy storage, batteries are a superior technology to hydrogen fuel cells. And with each passing year, their superiority is only going to progress relative to hydrogen fuel cells. And I think that's the main problem with the hydrogen economy, and we can go through specific use cases to demonstrate that. And one of the most fascinating things about Plug Power is, this is a business that's been around for north of 2 decades, and the one use case that they've settled on during that entire period of time, forklift power sources, lithium-ion batteries have proven to be a superior technology there in that one specific niche use case. And I think we can all agree that forklift power sources is not, going to lead to a $40 billion company. And so, if Plug Power hasn't been able to win out in that specific technology, that's a sign of what's to come in other potential use cases. And then I think just generally, if you do want to be betting on the hydrogen economy, Plug Power isn't the right horse to be betting on. We prefer Ballard.
Okay.
And we think that all of these companies are overvalued just because they're sort of operating in the wrong sector with renewables. But Ballard has sort of competitive fuel cell technology. One of the leaders in that space. It's not the one that should be trading at 25% of the market cap of Plug Power. And then beyond that, Plug has a very storied history. I mean, look, I don't want to cast judgment on what Andrew Marsh and the team of Plug Power has done to survive. But this is a company that has diluted shareholders massively over time. Their revenue comes from 2 customers that are essentially, in our opinion, purchasing Plug Power products in exchange for warrants and equity stakes that far surpass the revenue that they're paying out to Plug Power. And I think if you take those customers away, there's just not much of a viable business to Plug Power at all. This is a business that's never been profitable. It's overpromised and undelivered for decades at this point. And we actually originally wrote on Plug Power back in 2014. Right. It was we felt it was a bit of a stock promotion back then, and we understand what the CEO is doing in terms of coming up with clever ways to keep the company afloat and avoiding bankruptcy. And I guess I would do the same thing if I was in this situation. Mm-hmm. And so I don't want to use too much negative commentary around those actions, but at the end of the day, this company is just not worth $40 billion or anywhere close to it. And I think this is the latest installment of sort of the bubble that we're living in certain sectors, that I think we're all seeing in the stock.
And like just that aspect of this hydrogen economy and you made a point early on that differential, is that the main thing you're looking at, the differential between lithium ion? Is that whatever, is that the keep in here? Is it even a race, or is it like tortoise and the hare kind of thing?
Sure, David, you wanna take that?
Yeah, it's not. I would say it's not just lithium ion. Lithium ion happens to be, the current consensus best way to take advantage of electricity from the grid in terms of storage and transportation. It also at the in the same token is currently the best way to take advantage of any renewable energy from the grid. Renewable energy is intermittent. It's not, it's not a base load type of power production, and so batteries are a great way to take that intermittent energy and store it. It also, and there's just, it's just physically impossible for hydrogen to do much better, or any better at all, than a medium that directly stores the energy that's produced by renewable sources. And so that's, I mean, that's kind of the thrust of this, why the hydrogen economy can never take off.
So if I'm understanding correctly, and let me know if I'm paraphrasing it incorrectly, is it right where I'm saying you're already taking perhaps a very uneconomical power source in renewables and adding on another uneconomic layer in hydrogen storage, right? Is that fair?
I mean, to some extent, that's fair. I think it's conceivable or plausible that we'll have the enormous proportion of energy produced by renewables and then stored in either lithium-ion batteries or other kinds of batteries. I don't think that it's plausible at all that same technology can be used to get stored in hydrogen. It's not plausible. It makes no sense compared to the direct mechanism of storing it right away in the battery.
Got it. And at a high level, just about the technology itself, Sam, you mentioned the whole forklift business, which obviously, as you correctly stated, not necessarily the juggernaut I can think of equating to the market cap of this business. How do they, is there a genuine advantage there that they have? Is there something that I can see here that is saying, listen, if they can win the forklift business, surely the next thing is not that far away?
Yeah, I think when it comes to the forklift business, you have to think about path dependence and when the forklift business started, mm-hmm. right? And so I think if you look at our report back in 2014, we were talking about forklifts back then, right? So this isn't necessarily a new business, right? It happened to only take off in 2017, but Plug was doing this. You can go back and look at Plug's investor presentations back in 2012 and 2013, and that was basically their main product back then too. And I mean, you could, I'm sure almost everybody listening to this can go back and remember that in 2012 and 2013, lithium ion batteries in Tesla cars and electrified automobiles were really mostly a figment of people's imagination. I mean, it was really, really early on. And so back then you could conceivably say, oh, look, you have these two different methods of powering the future economy. There's batteries and there's hydrogen, and it makes some sense to try and sell both, but that's clearly not the case anymore, right?
No. So I got, guys, I'm going to work through questions online. So here's one. Someone's saying the green hydrogen economy could become a $12 trillion market. Yay or nay?
Yeah, I mean, that you got to be a little bit more specific than that. How is it going to become a $12 trillion economy, right?
Right.
Like, how is it going to become a $12 trillion market? At the end of the day, right? If you compare, just think about a power source of, whether it's solar or wind power, right?
Yeah.
At the same time, imagine this split screen in your mind where in one scenario, the wind and solar is getting directly stored in a battery and being used. So if you think about that, right? From the actual solar or wind power that's being produced to the time that you use it in your end use, whether that's in your car or in your truck or in, whatever it is you can be using, right?
Yeah.
You're only losing about 20% of that power of the initial energy that's generated by the sun or the wind.
Yep.
And you're not really spending any massive amounts of capital on new equipment, right? Because
Yep.
the equipment that you have right now can already do that. Whereas with hydrogen, right, even before you spend any money on the electrolyzers that make hydrogen, right, just to get from water to hydrogen, you lose 30% of the power of the solar and wind power that you used right off the bat. Yeah. Then you have to compress that hydrogen, right? That gives you another, between 5 and 30% losses, right? And then you have to transport that hydrogen to wherever it is going to be used. And then that hydrogen has to be used in a fuel cell. All right, and fuel cells themselves can only literally physically maximally be 70% efficient. So by the time you're done with the process, whatever every unit of energy that you got from the sun or the wind can actually only be about a quarter or 30% used at the end at the end node of of that chain, right? And so whereas when it comes to batteries, about 80% of it's going to be used, right? One of the diagrams we put in our report is where Volkswagen basically comes to the conclusion after their fuel cell program of many years that at the current there's just no way that that hydrogen can possibly be competitive with batteries in their usage, which is automobiles. So just the basic physics of that means that you're never 80% versus 25%. It's no contest, and that's without spending the money on actually building any hydrogen infrastructure, right?
And you need the infrastructure, right? Like that's critical here. Yeah.
For sure, yeah. I mean, you got to build electrolyzers to make the hydrogen out of water, and then you got to have a whole refueling economy built from scratch, right? Whereas, if you build a recharging station for electricity, I mean, yeah, you have to build the station, but it costs you, a couple $100,000. Every refueling station for hydrogen costs you $2.5 million.
Yeah. It's
where maybe 10 years ago it was more of an open question, but now, as in 2021, as electrical vehicles have are on the road and that infrastructure is getting built. 5 years from now, 10 years from now, the infrastructure on the battery side it will be leaps and bounds beyond what is available in hydrogen. And so as you sort of look out to 2040, it's just going to be very difficult to imagine people building out this hydrogen infrastructure there as those costs decline relative to what's available in the EV market.
Hey guys, Scott here. I'm curious, have you guys looked into the potential, what the capital requirements of building an EV fueling stations all over the country, for example, versus hydrogen? Because I know that hydrogen a bit has been attempted in Japan. I'm just wondering if you can help people understand, like, how do they compare as far as, capital requirements?
Yeah, so like I just said, it costs $2.5 million to build a hydrogen refueling station. Just so you have a basic, just to imagine for a second, building a gas station, right, costs like between 100 and 200 grand. Okay, so already it costs you 10 times more. An electric station costs even less than a gas station, because at the end of the day, all you're doing is basically putting up wires, right? Mm-hmm. And you're putting in the supercharger. There's just not much there. Right now, it's true that it's going to take you, once superchargers get better, and we've seen them already get better by a factor of, they've doubled their capacity, I think 4 times, right, which gets you a 16 or 32 times increase in capacity just over the last 3 years, right? As that gets better, yeah, sure, it might take you 5 or 10 minutes to fill up your car versus hydrogen. It might take you 1 to 3 minutes. But you got to ask yourself, how many hydrogen refueling stations at $2.5 million a piece can you build across the entire country to save 5 minutes every time?
I mean, another thing I've learned looking at the infrastructures, so the current pipelines that move natural gas around, move oil around, are those sufficient to move hydrogen around, or would you need to upgrade that infrastructure if you wanted to be piping it long distances?
Yes, that's a great question. So hydrogen actually cannot be piped exclusively in those pipes. Those pipes will become brittle and crack if you try and move exclusively hydrogen through them. You can imagine a scenario kind of like ethanol, where maybe 5 to 10% of the total content of those pipes will be hydrogen. But then you have to figure out what to do at the other end, right? But you certainly can't use hydrogen as a whole in those kinds of pipes. There's actually an interesting study, I think, put out by one of the UK's major natural gas piping companies. I think it was the UK, and they indicated there's just no way for them to move natural gas, to move hydrogen in huge quantities through their natural gas pipes, because the pipes would degrade over a pretty relatively short period of time. So they'd need to put in like something like hundreds of billions of dollars. And remember, this is just the UK, just to replace all the pipe to move hydrogen through those.
So you'd
pipes.
have to basically like dig up the ground and put in all new piping to make that feasible.
Or not even dig up the ground, just put a different pipe near the current pipes, right? We're talking about like a multi-trillion-dollar investment to get hydrogen moving from whatever source you're looking for to the end user. I mean, it's not even conceivable is the truth.
And then compared to electricity is some electrical cords, right?
I mean, with electricity, you don't actually have to do anything, right? We have a grid, we have a transmission grid, and there are incremental upgrades to that grid, sure. But you don't have to build a new grid from scratch.
Okay. Interesting.
So David or Sam, I got a question here from YouTube. So it's from Mike MBS asking, please ask a question about JP Morgan, Bank of America, Goldman Sachs. Why are they wrong? I assume they're all bullish.
I mean, look, they've been, this is not the first sort of hydrogen rodeo, right? I mean, hydrogen was hyped up in the 70s. It was hyped up in the 90s. It was hyped up in the 2000s. I'm sure if you go back and look, and we have some of those old, investment banking, equity research pieces from the 2000s. They were super bullish back then too. I mean, I would be very, very hesitant to use the bullishness of Wall Street. The same guys who are basically raising capital for all these companies, right? I'd be like very hesitant to use that as some sort of, sort of proof, like an appeal to their authority. I don't think that the science, holds up when you actually look at it.
That's a great point, right? The real aspect there is that it is one issue, right? The fact that these banks are incentivized to, there's capital raises here, right? And just on that point specifically, how much is this company burning in terms of, what they're like, how much cash do they have? What's their run rate here? When do they need to come back to the market?
Yeah, look, I think realistically, Plug and the other fuel cell companies as well, they've taken enormous advantage of these stock price moves, and every single one of these companies has raised lots of capital just since November. So I don't think they'll necessarily have to come back to the market anytime soon. They're fine.
Got it. Okay. Scott, you got anything else you're seeing on? I'm scrolling through.
I'm just curious. So it sounds like there may be some risks investors have to be aware of as they think about the timing of these risks. How they would play out. Could you maybe help us understand how you think these risks will evolve over the next year or so?
I mean, David, are there any specific,
like any negative catalysts you're looking at?
Yeah, I'll tell you. Look, at the end of the day, when you have a $40 billion market cap on $300 million of revenue, the burden of proof, so to speak, is not going to be necessarily on the bears. It's going to be on anybody who holds the stock. The question is, what positive catalysts are you thinking of that are going to move the stock higher than where it is today, right? The number of catalysts that we've seen over the last year, right? The European hydrogen report, the Biden administration, all the hype that's been raised around renewables, right? That's something that's just like not repeatable. And if you think about what Plug has done and what the other fuel cell companies have done, right? You look at where they've raised capital. That's kind of the best indication that you have of what they think their own companies are worth, right? So you've seen Plug raised capital, at $4 and $6 and $15 a share, and they raised an enormous slug at $29 a share, right? Thinking that they basically got an amazing deal out of this, right? So, if you're a shareholder and you're looking at what the company itself is doing, you should be thinking, oh, so they think that this is an amazing sell at $29, right?
Yeah.
So, think about what that means for 60.
Could you guys talk a little bit about, you did some good research on how Amazon has been given warrants, and there's other, there's reasons for them to buy products from these guys because then their warrants are in the money, and they can do what they want with them. Could you help us understand what's going on with that now and how you see that playing out? Like, what's the end game for those guys when they have significant ownership in the company?
Yeah, look, I can't speak for Amazon and Walmart. They have very, very good purchasing managers that clearly are make pretty smart decisions with good optionality in them. When they made this decision, they basically took on, each of them took on warrants that would allow them to own, at that time, before all these secondaries in the last year, at that time, they took on warrants that would allow them to purchase, about a third of the company together at the equivalent of $1 to $2 a share, right? And in return, they basically agreed to spend a few $100 million on warehouse equipment, right? I don't mean to say in any way that warehouse equipment is worthless, right? But your purchasing decisions is going to be a little bit different when you're incentivized by such an enormous option value, right? If you're Amazon and you're getting, options to purchase 30 million shares at $1, right? You have to know that when that deal comes out, which is what exactly happened. If you go back and look at the Plug power, stock price back in 2017, the stock doubled in a single day when they announced that Amazon deal, right? Amazon was basically in money before they even started to purchase any equipment.
So, so I got a couple questions from YouTube here. Good questions here. From San H2O. Ask why Japan, South Korea, EU, and now even China are allocating significant position of funding to hydrogen. Are they hedging bets, or probably they see some value? Like, is this all part of their science experiment budget, or do they really believe in it?
I would just go back and see how many times they've made these announcements over the last 10 years and how many actual, dollars they put to the programs, right? Yeah. One of the things we talk about in the report, South Korea has been making hydrogen deals for the last 5 years. And, I think 2.5, 3 years ago in early 2018, I think they put out, like a big hydrogen 2024 plan. Right, and they actually have a page. We may link to it. We in our report. I think we do. They actually have a page that shows their progress towards those goals, and you could see that they've basically done nothing. Yeah. They've spent no money. It's it's a lot of rhetoric and not a lot of actual dollars.
Yeah, it feels that way, right? And it feels like a lot of these feel good plans, carbon neutrality in 10 years. This is all just kicking stuff it's all going to come together. Maybe allocate a few dollars. Alex Fiel has probably the a clear good question here. I wonder as well, with all of this stuff bubbling, what's the catalyst for the market to recognize your short as correct? And what were the historic catalysts that sunk prior hydrogen booms? I think that's interesting.
Yeah, I think people just get, they get, what you'll find is that the companies and the deals, they make these promises, and then when the promises don't seem to deliver, people are like, all right, I'm going to check out. Right. And then that sort of momentum ends up building on itself. I think, in 1999, 2000, you saw Plug stock price go down 95% within 3 to 6 months. Yeah. Trying to get ahead of that kind of momentum is exactly the kind of thing that causes it in the first place.
Yeah, no, it's a fair point. So I guess ultimately I tried to look for it quickly. We had a busy day here. What's your is this thing so bubbled out that do you have a target price for this thing? How do you come to value this thing? Is there a point where you're a buyer?
Not on plug, no. I mean, I think the issues with just sort of the hydrogen economy as a whole and sort of the dismal prospects there sort of make this. I mean, none of these companies buy, in our opinion, at any point in price. So sometimes we just don't put price targets in our reports. But here we're looking close to zero. I mean, I think there's like 95% plus downside easily.
Right.
On Plug Power. And I think what's crazy is that just, today it's at 40 billion, right? So that path of 30 billion, 25 billion, which are still totally absurd valuations, for this business. We're talking about 40, 50% downside there.
Yeah. Fair point. And some, I guess the other aspect too is, we look at it through the cannabis lens as well. There's a lot of, obviously, Democrats coming through, a lot of this political view that, tons of money will be spent. Ultimately, where that money gets allocated in the projects, et cetera, could be a catalyst itself, right?
That's right. I mean, I think once there's more clarity on exactly where, what those policies are going to be and where that funding is going to go to, as it doesn't go to hydrogen, but goes to other areas of renewables, those would be negative catalysts in themselves.
And just the dollar amounts you guys were talking about in terms of the infrastructure spend needed here, there's no conglomerate of corporations themselves. You will need the government to come in and be a part of the backbone of the infrastructure spend if this is ever going to be a real thing.
Not only will you need the government to actually spend money, which the history is that they've said they will and they never do, right? But you're going to require yourself almost to have the government not only just buy the equipment, but also kind of incentivize the rest of the economy through enormous carbon taxes. Now, the carbon taxes may happen. I think what you've seen in Canada is that they've happened, right? And they have a set. They have a kind of preset rollout of the carbon tax and incrementally increases every single year, I think through 2030. But what you see over there is that it's incentivizing electric vehicles, right? It's incentivizing the grid to change more towards the renewables. And when the grid changes towards renewables, people fill up their batteries with those renewables. They don't, they're not going to lose 80% of the energy by trying to put it into hydrogen, right? And trying to pipe that somewhere.
Yeah. And there was a question earlier on in terms of where do you guys get that 20% residual? Is that kind of like, is that common? Is that stuff that you can find on what's it called? NREL and all that stuff? Like, I'm not, what's the basis of that?
I mean, look, we've spoken to a bunch of different engineers and chemists about this. That's, who've spent their entire lives working with hydrogen. So, we do have a pretty good idea of how this works. I think if you open up any sort of semi-scientific understanding of what goes on there, you'll see that that's kind of the case, right? One of the diagrams we link to in the actual report goes back to this Volkswagen thing. And I would say that their engineers are pretty good at what they do. And they come to the same exact conclusion, that the net efficiency at the end, best case, right, is 30%, like best case. Right. And that best case never really happens, right?
Yeah. That's your kind of top. It's the classic solar number, right? 30%. Meanwhile, solar cells are doing high teens, low 20s, right?
Right. So.
Scott, do we have anything else? Like, guys, obviously it's stock's down. Last I checked, stock was down 7.5. You guys, the hammer worked. It's good research. Like, have we missed anything here? What are the big points? Like, I think this was a good discussion in terms of touching on all the key points. Scott, do you have any other questions on your side?
Sure, our loans are pretty boring. We go along high quality businesses that, have very defensible business models and grow year in, year out. Sometimes we tend to be growthy guys ourselves, but, we're picking the businesses that we think are actually going to grow and become much larger 5, 10, 15 years from now. And what we short are maybe some of those stories where, we don't think that those growth prospects will be realized. We don't really short on valuation. I think both with Fubo and Plug Power, we think that, these business models just don't work. And so these are zeros, 10 years down the line. And so they're mistaken for growth businesses when, that growth will not materialize because just, there's something wrong with the business model. And I think, we do that in the short side, and then we go long quality on the long side. We have a large long book, but we're known as short sellers. We've been sort of one of the pioneers of short activism, going all the way back to the Chinese fraud days, and so most of what you'll see about us on the internet and on Twitter is on the short side.
Sam, yeah. So Sam, just on that, in terms of your history, on the Chinese side, obviously a big part of the EV push higher has been Chinese companies. Any thoughts there in terms of what were bubbly characteristics there, and how at risk that segment of the EV sector is?
So you mean like Chinese EV stocks?
Yeah, Chinese EV stocks. I know there's a plethora of these names, but just your thought on how bubbly that segment has gotten.
We haven't dabbled in it on the fund side. David, in your work, have you formed any opinion on some of the Chinese EV names?
No, I mean, we just all the things we've heard from the people we've spoken to is that, the fact that you see just so much activity among the Chinese EV names basically tells you that the Chinese fuel cell story is basically BS.
Right.
It's the same law of physics in China as it is in the U.S.
Oh, very God. Scott, what do you got, man? You had a question. Oh, Scott, hold on one second. Before we do close up, can someone give a quick summary before closing? I guess we'll just get you because obviously people have been joining the chat through the thing. So either David or Sam, just if you guys should just summarize at the end. But Scott, you probably have one more question.
I think we've got a company in the space sector. We've done a lot of work on satellites, and we've written on Global Star. We've done a lot of work in spectrum plays and satellite companies. And I think there's a satellite story that we've been investigating, and we'll probably publish on that in a month's time. There's a lot of bubbles out there. There's a lot of stuff.
Love it. Love it. So I got a question here. I got a question here. Someone's like, Sam must drive a Prius or a Tesla. Which, do you drive either? Do you drive an electric car?
I want to get a Tesla. So he's on to something. Hopefully in the next 6 months, I'll finally buy my first Tesla.
Love it. Okay, guys, either Sam or David, the elevator kind of drill down on this Plug Power short, which obviously has rattled the market to a good down 7.5%. Give it to us.
Yeah. So Plug Power is trading at $40 billion. We think that all of these hydrogen economy stocks are overvalued because that hydrogen economy is not going to develop due to how it lags relative to battery technology. And so I think when it comes to lithium-ion batteries and whatever is a successor to lithium-ion batteries, the way in which that they can store and transport energy is going to be superior to hydrogen fuel cells. And so this is just one of those technologies that we don't think is going to develop as bulls imagine due to inherent characteristics to the technology relative to batteries. And then in terms of a hydrogen economy play, we think that Plug Power isn't the right horse relative to something like Ballard. Ballard is sort of a leader in the fuel cell technology in a way that Plug Power isn't, and so it's a little absurd that Plug is the one trading at 40 billion, Ballard's the one at 10 billion. Though we think the prospects for both companies are dismal. Once sort of euphoria dies away.
Fantastic. And so, Sam, just to confirm, you guys don't have the long short of a long Ballard short plug. You're basically, or I don't want to.
No, I mean it's a way to hedge your bets. If you think that a bunch of headlines are going to hit and all of these stocks are going to go up, they sort of do trade together. So, yep. I think one can build a case just in terms of hedging your downside on a Plug Power short by going long Ballard. But no, we don't have that trade on. We're just short Plug Power.
Fantastic. Sam, David, guys, thank you so much. Everyone on YouTube, Twitter, thank you for the great questions. Obviously, a story that hurts many people's hearts, but clearly, it's got a big market cap, and they've got big shoes to fill if it's gonna live up to this. But guys, thank you very much for taking the time.
Yeah.
Great. Thanks for having us.
Cool.
Thank you.